Futures trading involves substantial risk of loss and may not be suitable for all investors.
Good morning. It's Tuesday, December 31st, about 6 a.m. Central Time. Want to wish you all you guys a happy new year, a new merry new year. I got Lewis Winthorpe. That's the beat up little doll from Trading Places here that someone had given me. But looking at these markets here, that silver market, this is kind of how I feel here. Despite you look at the year-to-date performance on a lot of these commodities, and I'll be covering some of the soft commodities later today on Yahoo Finance, where you have cocoa up 894% year to date, OJ up 78, coffee up 77, NASDAQ up 18, but you get the gold market up 18 as well, and then you get into silver up 13%, but it just doesn't feel, and I hate to use the word feelings, but it doesn't just feel like an explosive year. It feels more of a year of kind of a two-sided trading affair and really some disappointment when you look at the silver market. You look at the gold-silver ratio, and it truly reflects that at 89-1, and it really tells you that the story on the silver market is really, surrounding China and China's impact on how it could drive some of these commodities. In the boom time of China, you really see the euphoria really spread out in a lot of these different commodities. And then also, you look at how the dollar index plays a big role in many of these commodities and two-year treasury yields, with the Fed holding longer for higher on interest rates. It really kind of boosted this dollar index up, and it weighed in on many of the commodity markets. You look at the gold market right now, 26, 24. A lot of year-end targets on the gold market was around that 2,800, 2,750. So we're falling a little bit short of expectations. Silver, I did have a year-end target of about $30. So we fell just a little bit short of that. But I also include some green shoots on there. And that's where I think that options, can play a significant role in someone's portfolio. But really, it was making a lot of these transitions where you go back into the earlier part of the year in the energy space and you look at crude oil futures up about 10% on the year. And crude oil, I think, just looking at the way that it's setting up technically and some of the fundamentals out there, that we could be setting up for another kind of green shoot up into the mid 70s here on some of the front month contracts. One of the more disappointing contracts has been the platinum and palladium contracts, with platinum down 14% year to date and palladium down 20% year to date. So you're seeing now palladium kind of hang out below that premium of the platinum market. Now, I do believe some of the best performing commodities in 2025 really depends and hinges on China and China's ability to meet some of their stimulus measures. In the overnight session, they did report that their non-manufacturing PMI came out at 52.2 versus 50.2, and we saw a little bit of a boost on some of these commodities, but not a lot of liquidity in the market at the moment, as when you get these holiday type of midweek structures where you get Christmas with midweek and then New Year's midweek, a lot of people will take off just a 2-week period, and you see that really die down, and that's where you get this real choppy action like we're seeing in the U.S. equity markets. Now, back on the copper, I really believe that demand is still continuing to set the surge, and it's going to surge for multiple years. I don't know how many times we're going to see copper futures trade near this $4 or even below the $4 region, because of the fact that the demand has to pick up, because you have to expand the electrical grids. We've got electrical vehicles, and we've also got just renewed technology that's coming into play, not to mention the traditional demands here, everything from construction, infrastructure, and defense spending that's really going to boost this thing. And I think if you look at copper long term and back at the EV vehicles, is that an EV vehicle uses about 4 times more copper than a traditional combustion vehicle. So the demand and the amount of those EV vehicles you're seeing out there just continues to grow. Now, if you get back into the silver market, about 51 to 54% of silver is industrial demand. So you have to see this industrial pickup really take fold, especially in China, and then that's what can drag this market up. So it's going to be in 2025, we're going to want to watch all eyes on that. We're going to want to watch this gold silver ratio. When you get these big sell-offs in the silver market in correlation to the gold market, I think that you're able to exploit some of those opportunities there. Now, again, with the U.S. equity markets, branching out into that, the concentration this year was really in these 7 stocks, and that's what really brought things up. Now, what was critical was the amount of time that people were in the markets in order to have seen some of these great gains. Like when you look at the NASDAQ up 18%, you look at the S&P 500 up 17%, and this is just basic futures year-to-date performance, not the performance of the outright index that people look at where they're factoring in dividends and things like that. But if you look at the outright performance, it came down to about 10 to 15 days where you had to be in the markets, and that's where you had the green shoots that went up and you were able to capture the gains. That's why a lot of times it's time in the market, not specifically timing in the market. So you want to look at things like silver and gold and look at them for the long haul over the duration of the year, putting on multiple contracts and then having the ability to take some profits, trail some stops, and proper risk management. Risk management has been really the key to much of the success. I see a lot of people that put too many contracts on, and then what happens is you get a small correction in a market and it squeezes them out, rather than from them really proper risk managing the position and being able to stay in these things for the long haul. Now, you want to continue to think about how the S&P is going to play out. I think that the 7 stocks that are holding this whole thing up is going to broaden out, and we're going to see more need from a different administration come in, where defense and also your cybersecurity stocks are really going to pick up. I think that we'll get back to the basics, and you're seeing stocks like Walmart, Target, Costco all really pick up, and it's going to come down a lot to the consumer and how the consumer is able to withstand different developments within this country and how things are playing out. As long as the consumer can remain strong, the labor market can remain strong, we should see commodities in general rise. Now, you're going to want to be more selective in implementing different commodities into your portfolio, things like crude oil, things like some of the agricultural market, especially like corn right now, where the funds are very long on that market. And then interest rates, I believe that they're just going to cycle back and forth, and you're not going to really see much of a direction. Now, where gold gets its luster is if you see any kind of breakdown on any kind of economic data, those expectations, which have been brought down to a minimum of just 2 interest rate cuts in 2025 and 2026, will all of a sudden factor in just a bit more. That's why it's important to check that CME's Fed Watch tool quite often. Over the last week and a half, we've seen what went from an 8% chance that the Fed cuts rates at the January 29th meeting to now an 11.2%. So it's slowly rising that the Fed will cut rates more, and that's where you get some small tailwinds behind a couple markets. So I also believe that cryptocurrency, especially Bitcoin and Ethereum, will continue to rise. I believe that they'll have more staying power than some of these altcoins, which I don't put as much faith into because of the fact that we're looking for the Federal Reserve, we're looking for the Treasury, and we're looking for banks being able to hold some of these cryptocurrencies, and specifically Bitcoin and possibly Ethereum down the road. And there's been widespread adoption of those into investment advisors' deployment of capital, where we're seeing, a 0.5%, a 1% holding going into the cryptocurrency space. I know that if you start to look at some of these target date funds, things like the 2025 target date or the 2030 target date, start to incorporate some kind of Bitcoin or cryptocurrencies in there, that's where you would really see prices start to move higher, in my opinion. So if you got any questions, give me a call. That's kind of a broad-based scope, as I like to reflect on things with the new year upon us here. And I hope you guys all have a safe and merry, happy new year, a merry new year again. thinking too much trading places over here. But you guys got any questions, give me a call. Be sure to like and subscribe to our channel. Be sure to go to bluelinefutures.com. Check out our research. We put out a lot of great content about most of these markets here, and it's content that we don't provide out to the public whatsoever. So if you got any questions, give me a call, 312-858-7303. Remember, futures and option trading does involve risk of loss. May not be suitable to all investors. Good luck, good trading.